A new report from the Bank of England reveals that Rachel Reeves' tax and wage policies are putting serious pressure on Britain's middle class. Based on interviews with hundreds of businesses across the UK, the report highlights rising costs, stalled wages, job losses, and growing economic uncertainty. Following the Chancellor's recent budget, which introduced a £26 billion payroll tax hike, a 6.7% rise in the national living wage, and new green levies, companies are struggling. These measures, aimed at funding Labour's £20 billion infrastructure plan and fixing public finances, are having unintended consequences. Employers say rising costs are forcing them to cut back on wage increases and investment. Middle-income earners are being hit hardest, with pay awards shrinking and redundancies rising. In fact, 109,000 jobs were lost from company payrolls in May alone, pushing total post-budget layoffs to over 250,000. Many businesses are now reducing pay rises for staff above the minimum wage by 1 to 2%, compressing wage differences between experienced employees and new hires, hurting morale and motivation. Economist David Owen says this trend goes against the usual expectation that minimum wage increases lift wages overall. Retailers warn the living wage hike and payroll taxes could raise their wage bills by 10%, pushing them to either cut staff or move jobs overseas. The bank confirmed that large firms are already offshoring work, particularly in manufacturing and professional services. Food prices are also climbing, up 4.2% year-on-year, adding to inflationary fears. Supermarkets are under even more strain due to new £2 billion waste regulations, making it harder to absorb rising costs without passing them on to consumers. The bank also noted a drop in business investment, saying Reeves' tax plans are contributing to a climate of uncertainty. In response, Governor Andrew Bailey hinted at a possible interest rate cut in August to support the economy. Rachel Reeves, however, maintains that wages and pensions are rising faster than inflation under Labour, and that investment in public services, such as the NHS, benefits both people and the economy. Now, all eyes are on the Bank of England's next move, and whether a rate cut can help ease the pressure. Thanks for watching. See you in the next one.